a lesson to like everyone. There's going to be weeks, there's going to be a month, maybe there's 2-3 months where like you don't see profit from trading. So when the profits do come in, they do come in chunks. Like an example being, usually when I get a payout, it's like what I would used to make in my old job in a month, right? I'd get in one single payout, which is like a couple days of trading sometimes. So that's just, you got to remind yourself that sometimes you go weeks, you go a week, or you go days, you go a week, you go a month sometimes with no profits in trading. And that's the reality of trading, right? And the hard reality not a lot of people talk about. You got to be okay to show up every single day, still work on a consistent basis, but not see money all the time, right? And like I said, when the money does come, it comes in chunks, so it's a good pat on the back, obviously. But yeah, that was like October, for example. Definitely, hands down, the slowest month of the year for myself. November's been good already, so I can't complain. But yeah, it's the name of the game. That's trading for you. Okay, I'm going to hop on the charts here. Make sure you guys can see my screen. 1 second. I'm gonna pull up the chat over here. Everybody can see my screen all right? Charts? Yeah, okay, cool. All right, so I was actually looking at this before we started, but we'll start on US 30 actually. But a lot of people were sending me, actually not a lot of people, there was 2 people that were looking to take US 30 long right now. And I believe, I haven't even looked really, but if they marked it up, I assume they marked it up like liquidity taken here, okay? And I believe people wanted to go long here, okay? Thinking price would dive below here and go long. We talk about this all the time, right? And the higher time frames is the most important, okay? Because it doesn't matter how good sometimes the lower time frames, the 15-minute, the 5-minute, if you're on the 1 minute, the 1 minute looks. It doesn't matter how good these lower time frames look. If your direction, your bias is not there, it's not correct, you'll just get destroyed on the lower time frames, continuously trying to take trades. Maybe if you're looking along this thing and you continuously try to take longs, you'll just destroy yourself like that. You got to remember these higher time frames hold the most weight, so let them align, let them be clear to you, and then go down to these lower time frames, okay? So example being, look at US 30 right now, okay? A quick markup for you, a quick and easy one is, we've taken out this low and we've had a massive move to the upside, okay, taking out previous highs. And now I don't see any sort of liquidity right now, other than maybe price can come down back into this area here, anywhere in here maybe, okay? And maybe we come down here and we respect the lows and we build liquidity, okay? Other than that, I don't see nothing right here, especially on the daily time frame. All I see is that we're still trading above old highs, okay? We haven't even come back to maybe respect this, because maybe this induces a little bit more buyers, so who knows, maybe break and retest. Buyers are entering over here, maybe gives a false reaction, it continues off. But we haven't had anything. All we've done is trade above this high, and that right there is so important, right? Like, why would we be looking for buys on the lower time frames if the higher time frames we're trading above an old high? Okay, and not only that is we've induced sellers and we trap them. So if you just look on the 4-hour time frame here, I don't see anything but imbalances. Okay, sure. So essentially, anytime we get some sort of bullish reaction, it's just going to be another sell on the way down. Okay, and then once we come into these regions, you have to anticipate and expect that we can get false reactions down here. Okay, on a higher time frame perspective, this is a liquidity block, so you can anticipate and expect again that this can be false reactions. All right, and then it's going to hunt for some sort of internal here, or if there's no internal, then it'll just come all the way back up to the high. Uh-oh. Someone joined. 1 second, guys. Who has joined us? I'm going to ask to unmute you.
Hello.
Mr. Riz Iqbal.
Don't let me disturb you, boy.
Say hello to the peeps at least.
Hello, everybody.
You at
How's
home?
everyone doing this fine Friday? I'm at home, yeah. And you'll probably hear all the kids in the background shouting in a second.
No worries. Um, we're just going through some charts
Well,
right now. You just gonna hang out for a bit?
yeah, sure, yeah.
Okay,
I'll be
cool.
here.
Yes, sir. Okay. Yeah, but yeah, guys. So for the people that were asking me about longs on US 30, it just higher time frame wise, it makes absolute no sense, right? Let this thing come back down to these regions here. Again, we can anticipate and expect that these areas can provide reactions. Okay, and once that happens, these reactions come out of the market, then there's going to be more liquidity. There's going to be more data to go off of. All right. So as of right now, US 30, I am going to look for continuation shorts to the downside. Again, once we reach these regions in the liquidity block on the higher time frames, then you can maybe see bullish price action again. All right, but day by day, step by step. So same thing with NOS. Big move back down. If you look at this on the daily here, look what we did. So grabbed internal. Ever since we grabbed this internal point, look how we built liquidity on the way back up to the upside before we took out this external point. Okay, came down here, printed this internal, went back up to the upside, and then look at this buildup of liquidity we get. All this is very important, all right, because we're inducing buyers on the way up to this external high. We grabbed the liquidity at the external high, and now, coincidence, we're coming right back down to this liquidity that we've left. So next destination for NOS is going to be down at this low, but since this is a liquidity block, I don't see why we won't respect this temporarily. Maybe some sort of, we print a high here, come down here, take the high and continue off. That's a possibility. But again, this is all speculation right now. We have to react and see where liquidity is built. As of right now, the next low will be this low, okay, and then maybe this one down here. But again, we can anticipate reactions out of these areas. So careful on the indices right now. Big moves going on. Just let the market print us more data right now, okay? Because look at this. Look at these moves that are occurring at the moment. When these kind of moves occur, I always tell you guys over and over and over, just let the days go by, let the data print, let us have more candles in front of us, let the liquidity build up again. Then once there's liquidity on our charts for us, we can build that bias, build that direction. All right. Now this is an interesting one. Because I posted this on the forecast, I was saying let's keep an eye on price below this low, and then maybe seeing if we can respect this area and go higher. But obviously, we just blown right through it. Now I need to zoom out and see where we could be heading next. A couple different ideas I have. Let's see. We've grabbed highs on the left-hand side. Let me change this to... Grab the high from the left-hand side. And same thing with NOS. Look at this. These candles, us struggling like this, this is inducing sellers, but not only that, this is building liquidity. Why is this inducing sellers? Look at this. BOS. So all these areas, all these days, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So two weeks of trading, 2 weeks of trading days. We struggled to break this high, inducing sellers and building liquidity in the market. Then we grabbed the high on the left, and then maybe now that's where we're seeing that sell off back to the downside. So I'm leaning on more shorts now that, especially now that we've broken this area over here. Maybe back down to here to hunt this internal. But again, same thing with indices. Okay, big day of price action right now. Okay, 370 pips. I am now most likely not going to be taking any sort of trades Monday, maybe even Tuesday on GJ. I'm just going to need more data now. Okay? I'm going to need liquidity to build up again. And then I'm going to be able to pinpoint a direction where I want price to be heading to next. All right? Because in this example here, if you were able to take any sort of shorts in these areas, okay, this probably would have been your first target, and then maybe this your next target. After that, there's no setup in front of us. We have to wait for liquidity to build up again, and then we react accordingly. That's it. We don't need to predict where price is going to be heading. We simply just react to where liquidity is, and we target these areas. As simple as that. I did want to cover NOS quickly. I forgot to show you guys a possible entry. This was on Thursday. timing was tough, all right, but nonetheless, it still ended up being pretty clean, all right. So, oh yeah, also we can cover my long I took. I almost forgot about this trade. This was on Wednesday. So I sent this forecast out. Let's use the replay tool here. So I sent this forecast out on Wednesday morning, I believe, and I saw this was CPI as well. You know what? That reminds me. I wanted to talk about that quick. So everyone, like, who would have expected the cleanest price action and the cleanest entries to come on the day of CPI, right? And that's the power of showing up every single day, right? I came up to the chart on Wednesday, CPI, 80-90% of the time, big moves happen and there's not much opportunity afterwards, right? Sometimes there's still opportunity, right? And that's the power of showing up every single day. So I showed up Wednesday. Obviously in my head I was thinking, okay, there's probably not going to be any entries. Let's be realistic here. CPI got announced, okay, and it wasn't too big of a move across all pairs I'm looking. So I was like, okay, cool. There's opportunity still. I sent this forecast out as soon as CPI dropped. I saw a big spike up. I understood that this was a liquidity block up here. Okay, this high could be respected, and if it does, it should be a false reaction, and then I can target it. So I said to you guys, if we can respect this high, the one we're trading at right now, and we get a false sell-off to the downside to run these lows, why these lows? This is where buyers are. Okay, simple stuff here. We had a break in this is in London on Wednesday, a little BOS to the upside, then price respected the lows. Okay, what is this? Right here. This is step one for us to look for a trade. What is this? Someone type in the chat. Build up, thank you. Why is that important? That's important because now we have liquidity to take an entry off of. So buyers get induced here. Again, BOS, price returns to this area for them to buy at, and it moves away. After it moves away, simple stuff. This now tells me there's liquidity below this low. Okay? In coincidence, what's right to the left, supporting our entry? What is this? Someone type in the chat. Liquidity block. Very, very simple stuff. So I want price to come down, take out the buildup of liquidity, and then I have a nice liquidity block to the left-hand side to support my entry, and then we go long, all the way back up. We take the lows out, we hunt the highs. Perfect. That's what we're looking for. So if we can play this along, price spikes down. I actually got in quite low because the spike down was actually a little aggressive. But got in like this, and again, just target the highs. Simple stuff. Okay? But this is understanding and being patient as well. I remember guys were sending me charts right when CPI dropped, trying to force some sort of entry right here. Okay? Trying to make sense of it, like, oh, is there any way we could have been involved in this? This was all done on purpose. This was just a buildup of liquidity, okay? So anyone looking to take buys in this area, it flies, sure, it puts them in profit even. If they don't close their positions, they're going to have their liquidity here, they're going to have their liquidity here. And that's exactly what it hunts for. It takes them back out. We have a beautiful liquidity block supporting our entry. You take that buy anywhere below the low, and we run all the way back up to the high. Any confirmation entry? To be honest with you, I haven't looked, but in a setup like this, there's no way we should be looking for a confirmation entry, okay? Because there's we always have to be taking an entry at some sort of liquidity block, and what do we have right here? A liquidity block. Okay, so this right here is an entry, no matter what. Now, just for the sake of looking, I'll look for you, but I don't believe there was a confirmation entry. And, oh, maybe, yeah, actually, I'll do like this. And you know what, actually, I did forget. I think Elijah took this entry. But we get price to the highs up here. Okay, respects the highs and moves away. And look what we've left, internal. Why is this internal liquidity? On a very, like if I have to zoom in, I can see that price has respected this low multiple times and then moved away. So same concept as the higher time frames, but just happening on the lower time frames. So we've respected this low over here, and then moved away. So leaving that internal liquidity, leaving these early buyers, and then again, what do we have right below? Same concept, liquidity block. So a buy anywhere below here was nice. Okay, so you could have taken it just like this. Stop below the liquidity block always, and then entry up here. So yes, David, there was a confirmation entry. there, and then you have the other entry we just discussed right here. Boom. This is pitch perfect. This is like super, super ideal. Once I saw us respect this high, move away, I was like, this couldn't get any more easier than this, honestly. But very, very clean out of NOS. And then let's delete these drawings. Thank you, sir. No problem, sir. All right, let's go into the 5 minute and discuss this. So, what happens when we've taken out this high? Someone tell me. Once we took out this high, what happened? No, when we took out this high, what does that mean? It's a BOS to the upside, yes. This also means we've trapped sellers, look. BOS here, they're gonna be selling here. Right? So once they've entered here, look how price moves away, again, moves away. Now we have liquidity above this high. Okay, exactly, we've induced buyers as well. So now that we understand that, we've taken this high out and we've trapped sellers. Liquidity block to the left, okay? This would have been a large stop loss if you took the entry here with your stop above the liquidity block, but again, same concept still applies. Just unfortunate that liquidity block was very far away, so your stop would have to have been high. Very big. So then in that example, you have to wait for some sort of confirmation entry. So we understand someone said induce buyers, perfect. Let's play this out. Okay, so if this thing has induced buyers, what do we anticipate and expect at a low like this? If buyers are induced, if we get reactions out of here, what is it going to be? It's going to be a reaction. It's going to be what though? False reactions. Okay, perfect. This is going to be a trap. Look what we have right below. Liquidity, right? Now you have to ask yourself, we want to target this, but we have to take out some sort of highs first in order to target this. And again, our entry always has to be at what? A liquidity block. Cool. So we trade higher. Now look to the left-hand side. Right away, what do I see? A liquidity block left. Yes, you could have marked this as well. But a liquidity block left right here. And what do we have right below? Liquidity. Look at this whole channel, this whole buildup. Okay, this is inducing sellers on the way down. Okay, sellers are getting in the market every single time it goes back to a high, getting in, and then false reaction out, and then continues down. This is a buildup of liquidity. So what can we anticipate and expect? A run of that. Okay, we take that liquidity out. We have this liquidity block to support our entry, and then if we come back down here, what's this going to be? Trap. Same thing. Even if it comes all the way back here, up here, it's a trap. And then we continue back down to the downside. So let's watch and see what happens. We get tagged in. Stop. Again, always above the liquidity block. Simple stuff. And you can target the lows. And then, obviously, like we talked about in the higher time frames, look at this buildup of liquidity we have down here. Okay, you have multiple different targets, so we can target even right here, because maybe once we've taken out this imbalance, we'll get a pullback. So there's another target down here. First target can be here, and the next one will be right here. Look how easy this can be sometimes. Like, just look at the lows. Doesn't make any sense for us to take this high out and just go long from here. Logically, it makes absolutely zero sense. So once you get this false reaction, it's simple. You're just going to be like, okay, let's short right back down into that. But don't jump the gun. You want to make sure, again, we have that buildup. We have that trap move taking it out. Okay, we tap into liquidity block for our entry. And again, we move away. Oh, now, I'm not going to tell you guys that this was the most pitch perfect entry, and the reason being, I would not have been awake at this time, so this would have to have been a limit-based entry. This is at 4 a.m. Okay, so this is in the midst of London. I'm dead asleep, dreaming of unicorns. So I'm not awake at this time. But what I could have done was, after this internal was printed, all this liquidity was built. This was in Asia. Okay? So I could have understood that, and I could have looked, and could have said, hey, cool, I can set a limit at this high. I have a perfect liquidity block to support my entry, and then I go to bed. That's an example of taking a limit entry. But, again, I'm not going to be unrealistic. This was just a crappy time to take a trade, especially on an index. So it is what it is. Nonetheless, technically, looking at the chart, the technical aspect, pitch perfect. All right, and then, again, obviously, because of the higher time frames, we sell all the way back down. So both targets would have been hit perfectly in this example. Okay, everybody understand this? Riz, you understand this? I need a guess
It's
from
a
Riz.
trap.
Good stuff. All right. What else? I think there was. I took 2 trades Wednesday, guys. Help me out here. One was on NOS, that long, and the other was gold. God, I have short-term memory loss. Oh yeah, gold shorts. Cool. Let's cover that. That was clean as well. Where are we at? Wow, this thing sold off so much. Wait, I'm tripping. My entry is over here. I'm looking up here like an idiot. I'm on the 15-minute time frame. Okay, cool. Let's go back to Wednesday. Yeah, guys, this was another one. Like, same concept with NOS. Right away, when I saw this, when I saw this bullish move from low to high, I understood. I was like, okay, what was the purpose of it? We grabbed this internal, this build up of liquidity we had right here. Cool. And then when price returns back to the low, look how we respect the low and move away. As soon as we move away, like, this is just an obvious target point. Buyers have entered the market here. Okay, there's going to be liquidity below this low. All we have to do is look for a sell setup into these lows. Okay. I don't know what I mean by leg. Okay, cool. Now, what did this high here respect to the left-hand side? This. So, if sellers entered the market right here, there's going to be liquidity. Boom. So, you have to be able to stay patient and wait for that. So, we wait for... Okay, this was CPI actually, so this ends up being perfect. But, look at the price action that London gave us here. London and Asia. What was the purpose of this? So I always tell everybody, on the days that we have big news events like CPI, FOMC, NFP, do not, like, I don't want to say do not, but be aware of that and understand that if you're looking to take trades in London, you're most likely going to get price action like this. Okay, and it's all done on purpose. Again, just to build liquidity for CPI. So if you're looking at trading price action like this in London, you're just going to absolutely do your head in. Okay, and then by the time the actual entry comes around, you can't even get involved. You're emotionally, you're done in. You've been watching candlesticks print like this for the last 5 hours. You wouldn't be able to take anything. We'll cover that. But yeah, we get a big build up of liquidity here. Perfect. And then CPI drops. Let's use the replay tool here. I'll discuss my whole thought process. I went through in the case study, but I do want to cover it again. But we get, look at this nice build up of liquidity here. Okay, inducing sellers. Then CPI drops. Boom. Taking everybody out. Grabs that high from the left-hand side. That's what we want to see. And now, simple stuff here. Look at this. The amount of buyers to the downside. Okay? Short, 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 short. Right down to this low. Now, what we usually do is, if we wanted to take an entry right when the liquidity is taken, we'd need to see what here? What do I need to see there? A liquidity block, exactly. But, I mean, maybe you can argue and say there's one at the very, over here. Other than that, I don't see any sort of clean liquidity block. Again, if I wanted to see something, if I saw something like this, I could take my sell right here. Boom. Stop goes above my liquidity block to the left-hand side, and we target the downside. Okay, that's the example for an extreme entry. Again, always add a liquidity block. If it's the extreme, or even if it's a confirmation, always add a liquidity block. So again, that would have been the extreme. We didn't have that happen, so we need to wait for some sort of confirmation entry. So I was waiting on the 1 minute here, and same thing happened. Actually, we'll go candle by candle. I saw us have a little BOS to the downside here. What is this going to be? This red box. Trap. Same thing. Price comes up into this high and moves away. Then we have a beautiful point to take an entry from. Why is this high here going to be a good point to take an entry from? This one right here. Exactly. We're going to take this trap, induce, early sellers. Yeah, exactly. So we're going to take the early sellers out. We're going to run that liquidity. And same thing. Always. Liquidity block to support our entry. Okay, can't get more cleaner than that. So I'm thinking about all this in the moment. I understand that, cool. This red box is going to be a trap. If we get reactions, perfect. We're now going to have liquidity above here. Perfect. We got a reaction. We've left internal liquidity here. We've taken out this high. What's this down here as well? Trap. Okay. If we get reactions again, same thing. False. Okay. And if we run up here, sell. Anywhere above this high printed at 8:38 a.m. is going to be a sell. It can go all the way up to here if it wants to. Oops. It can go all the way up here and make equals. Still a sell. Okay. So we're going to wait for price to run that high. Stop again, always above liquidity block. I'm annoying myself now. Just kidding. Look how we stall at the red box again, just inducing more sellers. Stay patient. Trust the system. Doesn't run it. There we go. We get tagged in right here. We target liquidity to the downside. Okay, highs taken. We're going to anticipate the lows to be taken. And would you guess another false reaction to the downside? Why? This is just building liquidity. So if there was some sort of entry here, like if we had, let me draw it out just for an example purposes. Let's say on the way down, when we were selling off, we had this kind of price action. So we left highs here, and that was going to be right here. That means when price sold off, if we had false reactions down here, you could wait for price to come up, grab those highs, so grab these highs, and then you could look for another sell, back down. Okay, take the highs and go back down. But again, I didn't see anything like that occur, so there's not really any sort of pullback entry. But we run some sort of internal point here, okay, and just continue back down to the downside, and guess what? Slam the lows. Perfect, textbook. This was trade of the week in my opinion. Trade of the week. Any questions? All clear on this? Clean trade, yeah. Honestly, so clean. Textbook. Let's see if there was. I think one of you guys actually, I don't remember who did. I was at the gym when this occurred. So someone sent a chart. But you can argue and say there was some sort of internal liquidity here. Nothing so clean to me. But look what we had. Nice build up of liquidity here. Trap move up. Grabbing highs. And then we get the move back down. Same thing over and over and over and over, right? Yeah, that's right. Martin took it. I forgot. Okay, so it was Martin. But yeah, that was gold. Now, let's take a look and see what we think gold's going to be doing. Week just finished off. Big bearish week. So from high to low, we're looking at, what is that? God, 1,400 pips? 1,500 pips? I'm not going to be expecting much on gold next week. Well, to be honest with you, It's still going to be tradable to some sort, but just intraday. Maybe like if I'm to predict the next weekly candle, maybe we come up, tap this area, so sellers can get in. Okay, we print weekly high maybe here somewhere and just continue off. I don't know. That's just a guess here. Go down to the daily, at the 4 hour. We've left some internal here. I'm just saying again, a big sell off. I'm just gonna need more price action now. Okay, this is when the waiting comes in. All right, so I won't be taking nothing on gold right now. I think all across the U.S. pairs. Don't even get me started on euro, please. Won't be taking anything on euro. Pound, same thing. Look, higher time frame extreme. Just wait. You just have to wait. Need more price action to come around, and then it'll be tradable. All right. But yeah, same thing. Gold, euro, pound. I'm just gonna be waiting. UJ, bulk. Nothing too clean right now. We have left. Look at this. Some liquidity right here. So it could come back down to this low. But we just had a big 4 hour candle. Most likely Monday across the whole all charts. Just no opportunity Monday most likely. Going to be probably a rangy consolidating kind of day. But yeah, left liquidity down at this low, so maybe UJ can run down here. But same thing. I'm going to need to see a build up in the market, okay? And then we run some sort of build up, and then we go to the downside. All right. Same thing over and over and over. I'm just gonna have to wait for now. I need liquidity to build up. Once there's liquidity on my chart, I can pinpoint a direction. All right. There's no reason to be forcing a bias or direction if there's no liquidity. But yeah, I've covered everything I've wanted to cover. What do you guys? Any questions? Any concerns? How about AU? AU's similar. We're starting to. So it's a little more tradable. Look at the difference between AU and like GU, right? Like. There's more price action right here. You can see that we built liquidity at the lows down here. Okay. We've also built liquidity at the highs. So I thought there were sells today on EU. I haven't even looked, to be honest with you, man. I can take a look. No. If I was to take any sort of sells, if I was above this high, right? Make sense? Oh, sorry, brother. Let me go take a look. Yeah, of course, to consider a liquidity block, David, and that's why there was a reaction from it. But it doesn't mean I'm taking sells from it. Right? Like, look at this. Same thing applies. This is a liquidity block. But am I going to be buying from here? No, it won't be. So, has low probability trading. Sorry, you said it was gold. What day? Remind me. Tuesday, 1 p.m. I don't like the time, but we'll take a look. No. You'd be trading with engineered liquidity. So remember about the whole sell setup I just explained, right? This move up here, taking out internal, okay? Anticipate this to get taken eventually. And if we do get reactions in and around these areas, it's going to be false, okay? It's a little more choppy, a little more ugly, but it's the same thing as this. Literally like this. We will not trade from areas like this. Okay? But if we do respect this area and move away, there's just going to be liquidity down here. And that's exactly what happens. We respect this area and we move away, liquidity down here. But this is low probability trading. No good. We let the liquidity build the market, we let the market build liquidity for us, and that's what we target afterwards. Taking trades in these kind of areas is risky because you're essentially just predicting that there needs to be liquidity built here instead of just allowing the liquidity to get built and using it as a target. Okay? So this is low probability, this is higher probability. Okay, Preet? And something again, I've mentioned before in the past is just because there's a move in the market doesn't mean we need to be getting involved in it. So a lot of people they're like, okay, this bullish move just happened. How could I have involved myself in that move? But you can't look like that because majority of the moves are just building liquidity in the market. Once there's liquidity built, we apply our system and we trade into these liquidity points. Any other questions, guys? Any questions for Papa Riz? Was there a buy opportunity to attack those highs, pre-highs? Yes, but the most important thing here at Kingsley is you have to understand, we just talked about is we understand CPI is on Wednesday, New York. So I don't want to be trading this kind of price action, and I also advise you not to be trading this price action. So I'm going to say no. There was not a buy opportunity because maybe technically you could have argued and found something, but you have to combine all of it together, right? Risk-wise, taking entries before CPI is a big no-no as well, obviously. Does that make sense, Kingsley? Yeah. Like if you think about it, all of Tuesday and London Wednesday built liquidity for CPI. Essentially, the move wasn't, the sell move to the downside wasn't going to occur until Wednesday at 8:30 a.m., until 30 minutes into New York Open. So the market used all of Tuesday and then London Wednesday to build liquidity for CPI, and then we had the move. Prep for NFP, exactly. I guess you could say it like that. It built liquidity, not for NFP, CPI. Build liquidity for CPI. Any questions, guys? Thanks, no worries, brother. No worries at all.
What's everyone's biggest struggle been the last month or this year, for example? Maybe not technical based, but generally speaking with their trading, maybe psychological, maybe fundamental, maybe technical. What is it? I remember I used to do Q&A webinars every Friday. It was a struggle to get people to ask questions, as some of you may know.
It's true. A lot. I want these guys to, and some of you guys do, but a lot of you guys, I don't know if it's because maybe you don't want to speak up or you don't want to ask. There's never a bad question, right? So at the end of every single webinar, I always let you guys ask me some questions. What you guys struggle with. It could be technically, like Riz said, it could be psychologically. But yeah, that's what we're here for, right? We're here to help.
One of the biggest things in trading is two or three things, really. One is having a defined edge, which is what you have here. As part of that edge is you want to collect data on it yourself so that you can truly believe in it, you can truly see the reality of it, because it all depends on the pairs you trade. So whilst Marco has on this webinar gone through a bunch of different assets and pairs, you might only be trading one or two of those. But the data for those one or two pairs will be different to the next one. So like the data for Euro USD is going to be different to GU, even though both have dollar correlated in there. But they're both two different pairs, which will have two different data statistics. It might be very similar. But that's why it's so important for you to do the work of collecting data on the pairs that you trade, because then you will have data that reflects, the win rate, the average losing streak, the average winning streak, and using that information, your psychological problems not diminish, which means completely goes, but they minimize, because a lot of the psychological problems comes from trading in the dark. Even if you have the strategy that you're being taught here, if you don't collect the data on it, yes, you have the strategy, yes, you can trust Marco, yes, you can trust the strategy itself, but then as soon as you take a loss or two losses or three losses, for example, if you haven't collected the data to be able to know, okay, actually having a free losing streak is pretty normal. Plus, let's not forget as well, as part of that data collection, you then are able to quite clearly define what your A plus setup is and what your B plus setup is, or whatever it may be. If that's something you do, some people only go for A plus setups. Not many, to be fair to you, because A plus setups are something that may only happen a handful of times a month, if that. And really, it's the B setups, the A, just plain A setups, the C setups. They're the ones that actually give you the capital day to day that adds up for you to then risk a bit more on those A plus setups. These are all different concepts that, depending on you as a trader, you would decide on using. But what I'm getting at though is when you have that data, it minimizes your psychological problems that most people unfortunately use as a crutch and blame for the reason they're not successful, when in reality they haven't done to collect the data on the edge that they're trading, and therefore it's obvious why you'd have those psychological problems, because you're trading something that you don't actually have the data for to then therefore have confidence in, and that's why that work isn't, it's tedious for sure, it's tedious, but the reality is, if you want to be a trader and you want to be a profitable trader, that's something that you're going to be willing to do. You're going to be willing to collect that data. Roughly, I think 6 to 9 months with Marco whilst he was developing this edge. I was trading my own edge, but he was developing this edge based on liquidity. And at the start of that 6 to 9 months, it wasn't easy for him. It wasn't like it was being profitable every day. But he was developing that edge. He was spending time in the markets. There was times when I would say, "Hey, jump on a call. Hey, let's jump on and do this or do that." But he'd be like, "No." And I'm talking on the weekends. I'm talking on the weekends. He would be like, "No, I want to break down the markets." I'd be like, "Yo, the markets are closed. What's wrong with you?" And but that's the dedication that is necessary for you to be able to develop that edge, that is necessary for you to build that profitability. And if you're serious about trading, which I know all of you are, because that's why you're here, but sometimes people are in discords where they're not taking it seriously because they think just being in the discord is enough. But that's not the truth, right? Being in the discord is what's going to allow you to have a community, and it's going to allow you to learn about edge, and learn an edge that is going to help you to become more profitable in the markets. But you have to still do the work, which is collecting that data, right? By having that data, you can then have a lot more confidence, and you would understand your edge a lot more. And then off the back of that, it's about obviously being resilient in the markets. By then having that understanding, what your edge will look like, what your average losing streak will look like, what your average winning streak will look like, and you'll be able to handle it a lot better. You'll know when you have low probable conditions, when you shouldn't be looking to be trading. And that's another thing which is so important. A majority of traders, unfortunately, assume that to be a trader, you need to trade every day. But the reality is, if you have low probable conditions, why would you be trading that? Why should you be in the markets in those conditions? Why should you be in the markets when you're faced with those conditions? You shouldn't. You should be trying to sit on cash, right? Which is in a position in itself, which takes discipline in itself to not take a trade. If anything, it takes more discipline not to take a trade in those low probable conditions, and not to take a trade that doesn't fit your plan, than it does to just be able to take a trade willy-nilly, anytime, any place, any strategy. That's very important to recognize that, because you want to save your trades, those bullets in the chamber, if you will, for when the conditions are right, when your model and your edge presents itself. And that's where that whole classic saying is, less is more. And I speak to, obviously, as you know, a lot of traders across the world, a lot of the best traders. But I speak to them about, the only hack really in trading, everyone always is looking for a hack. Everyone's always looking for that easy fix. There isn't one really, but this is the only one, which is if you can learn to take less trades, and the less trades being those low probable, low quality, don't really fit your edge trade. If you can reduce those and minimize the mistakes and the trades that you shouldn't take, if you minimize them, you take less losses and you make more money as a byproduct without taking any more trades. That's the only hack really in trading. And that's the best one, because it means that, yes, you take less trades, which means less stress, less risking your capital. You take less losses, because those less trades aren't, the profitable trades. They're the ones that really you shouldn't be taking anyway because they're a low probability. They don't really fit your edge, and then you make more profit as a byproduct. So let's say if you take 10 trades, of which four were winners, and let's say it was a one to no, let's say 1 to 2, just to keep the maths simple, right? 1 to 2, so four winners, and you had six losers, right? Or let's say you had two break evens, and then you had four losers, right? Of that, in that scenario, you have made 8%, lost four, so you're at 4%. But of the four losers, three of them weren't actually valid losers, like valid trades. So those three losers, as part of your data, shouldn't really be there. And there is one loss there that is meant to be there. Okay, so really your job then is to try and get rid of those three losers that you shouldn't be taking anyway, right? So therefore, if you're able to do that, now you've taken three less trades, amazing. You've then, let's say you're risking 1%, you've then made 3% more because you haven't taken those 3% losses. So therefore, at the end of it, you've actually then made 7%, right? You made 7%. So you've made more by taking less trades. That's really the ultimate hack. I just waffled there. I just waffled there for a long time.
No, no,
What's
that's good,
basically,
dude. I feel like that's from my experience too with just teaching. That's a lot of people's biggest downfall is trading too much, over trading. And I remember being at that point. We've spoken about this briefly before, guys, but you guys feel like when you show up to the charts, you feel like that thing inside you is like, the more trades I take, the quicker you're going to progress, right? But the thing is, like Rich says, less is more in this game, and it's hard to swallow because when you're not taking trades, you're sitting there and you're feeling like you're stagnant. You're feeling you're not progressing in some way, shape, or form, but you are. The hardest thing, like Rich mentioned again, is being able to stay patient, being able to stay disciplined in those low probability conditions. That's when the capital is preserved. And then when the high probability conditions come around, like trades like we've just spoken about and gone through, these are the ones you attack, right? These are the ones you throw down, and then those losses that you were able to avoid, your profits are just going to get bigger, right? That balance is going to get bigger. That those payouts will just get bigger naturally. But yeah, solid stuff, Riz. I appreciate you talking on that.
no worries, no worries. Someone said that they struggle, difficult trusting my analysis and sticking to one trading session, and also chasing those tiny moves that aren't necessary. Yeah, basically what I just said there will probably help with the data on that one session. You will then understand what that session will bring you. And you will probably do that maybe across, I don't know, however many pairs you're looking at, whether it's one, two. The thing is, another thing that's very important is understanding your personality. A lot of people don't talk about that. Understanding your personality as a human being outside of trading, and then just playing to your strengths. You might be a very patient person, which is fantastic. You might not be though, and that's absolutely fine. Rather than trying to, build yourself into something you're not, or forcing yourself onto the markets in a particular style that doesn't fit your personality at all, which essentially you're just trying to, it's like going against the grain. It's essentially like counter trend trading, right? In a sense where you're going against what the market's trying to do. It's the same principle there. If you're picking a style of trading and it doesn't mean strategy wise, it just means maybe the time frame wise, you might be trying to scalp while you're a day trader or a swing trader. And if you're trying to do that, it doesn't mean it's impossible, but it's just about trying to make it easier for you as a person. But yeah, in terms of that thing you said there, I would just look at, okay, however many pairs you're looking at, review that as well. Review like, or maybe I'm trading one session, but I'm trying to trade 5 pairs. Maybe that's what's not making sense for you, right? But like I said, whatever it is, build the data first. Look at that session. Let's say it's New York session. Let's say it's 3 pairs. Go and collect the data on those 3 pairs, both from the past, but most of all, of course, in the present moment as well. The past is going to allow you to get some form of idea of what performance should look like. Present, obviously, is the performance of what it really looks like. But equally present, the funny thing is, the present is where you can make mistakes and then therefore have, what you would call like wrong data. Essentially, you're collecting wrong data only because you're not actually following the edge, and that's where you have to be accountable and honest with yourself to say, hey, yes, I took this trade and it was a loss, but actually on reflection, on review, wasn't actually a trade I should take because of XYZ. Collect that data still, trying to keep note of that data. And when it comes to collecting data, there are many different ways. In this day and age, I would say he used TradeZella so it's so much easier and automated for you. If you can't afford TradeZella for any reason, no worries at all. Just make sure you do the work. That can't be an excuse for not collecting, data at all. I know it's hard. I know it's tedious, but at the end of the day, you've chosen to be a trader, and you have to understand and respect that if you've chosen to be a trader, you have to do the work that is necessary, right? And it's necessary to collect your trades. It doesn't matter how you go about it, but the reality is, you can go simple and just collect screenshots and before and afters and little notes. The reality is, what's going to help you the most is the not just that, but also the data. Like I said, the actual raw numbers, because that's what trading boils down to in the end of the day. If you boil it all down and get rid of any terminology, it's all just numbers, right? But from lot sizes to risk to the actual, entry price and the prices, it's all just numbers at the end of the day. And that's why you need that raw data, the raw numbers of your edge, the win streak, the lose streak, the average win size, the average RR, the average R multiple. And that's why like being able to invest into something like TradeZella, is very, very helpful because it gives you all that information. So therefore, all you have to do then is look for the patterns and look at the information without having to work it all out for yourself. So that's great. What I can try and do is get maybe one or two free subscriptions for you here in the group. So I'll let Marco decide on that. So we want
Appreciate that, Riz. That'd be awesome.
to give it to people who are most active, putting in the work.
No, 100%. I agree. I appreciate that. That'd be awesome. I'll appreciate you also speaking, taking the time to speak to all these guys as well. But yeah, I think we'll wrap it up here, guys. And yeah, let's 1 second here. Yeah, okay. Let's wrap up here. Hope you guys have a good weekend. This call has been recorded as well, so there's been lots of stuff we discussed. Obviously, thanks again to Riz for hopping on and speaking up for a bit. That was awesome. But yeah, feel free to watch this again. It'll be uploaded in WAP today probably. I'll get around to doing that. And yeah, hope you guys have a good weekend. And I'll see you back for the new week on Monday. Thank you. No worries, guys. Take it easy. Thanks again, Riz. Appreciate you, brother.
Anytime, man.
Yes, sir.